You've probably heard of the London Breakout Strategy, but the problem is most people don't know how to trade it, and the ones that think they do are actually doing it wrong. The fact is, you may be one of them, or maybe you're just someone looking for a good trading strategy that actually works. If you're in any of those categories, this video is for you. I want you to pay attention to what I'm going to be explaining in this video. In order for you to get the best out of this video, put your phone on Do Not Disturb or silence so you don't receive any notifications while you're watching this, so that you don't get distracted, because all you need is to miss one vital information to mess this up. So without wasting any more time, make sure you subscribe and let's get started. As we begin, the first and most important thing that you need to note is the Forex market is manipulated by people that we call market makers. Some people call them smart money concepts or smart money. Some people call them big banks. Some people call them institutional traders, hedge funds, whatever you want to call them. But you need to understand, first of all, especially for those that are new to trading Forex, the Forex market is manipulated. The things that you see on the chart, they don't happen at random. There are certain things happen on the chart and certain patterns show up on the chart for a specific purpose. The way the market works is if there are people buying, then there has to be someone selling. I always explain this all the time. If someone's buying, another person has to be selling. You can't go to a physical market to buy something and no one is selling that. If no one is selling what you want to buy, then there's no way you can buy it. It's as simple as that. So what happens is the Forex market is manipulated. How? Market makers are the liquidity providers. They are the ones that provide the liquidity in different ways, right? And one of the ways that they generate liquidity is by getting you to buy while they sell. For example, if you're selling, it's going to automatically read on the market maker's book as buys. If you're buying, it's going to be read on their books as sells. So they fill your orders automatically. I'm not going to dive into that real quick, but let me just go into the most important part here. I just want you to know that so that you can get a proper understanding of what we're explaining when I'm talking about some terms on the strategy. So the second thing that you need to know is market makers create certain patterns to get us to react in certain ways, mostly emotionally. And the purpose of that is to get you to click that button. Once you click the button buy or sell, then you're now a participant in the market, and then therefore they can take your money. If you don't click the button, if you don't buy or sell, if you don't participate in the market, then there's no way that they can get your money. And how they do that is they create certain patterns, they create certain support and resistance levels for you to react to. They move candlesticks at different speeds and at different shapes and sizes so that it can get you to react emotionally. For example, if you see a big fat candle going in one direction with speed, you're going to feel like that's the direction that the market is going to go to. For example, let's say you take buys and then all of a sudden you see a big fat candle going down, going against you. You're going to feel an emotion that this trade is not going to work out. And then what happens? You click out of the trade, you scratch out of the trade, and then what happens? The trade later goes in your favor without hitting your stop loss. Those are some of the manipulation tactics they use to get you to react emotionally. All right. So now that we know that the Forex market is manipulated and there are certain patterns that market makers create in certain ways to get us to react emotionally, ultimately leading us to clicking the button of buy or sell. Our goal as retail traders here, we're not trying to beat the market makers. We're actually trying to trade like they trade or try to see what they see so that we can trade in line with them. You're not trying to trade against them. If you trade against them, you're going to lose your money because they are dealing with trillions and trillions of dollars. We have our little $100, $1,000, $10,000 accounts here to trade, and it's not really going to do anything on the market. So the only way you can beat the market makers is to trade in line with them. And that's what I'm going to be teaching you in this video and in the videos to come. And that's what I've been teaching in my YouTube channel. So if you're a new member, if you're new to my videos, make sure you like and subscribe. I'm going to be dropping some valuable information in the upcoming videos. I'm literally going to be showing you things that are not meant to be free. And this is something that took me about 4 years to master. And I'm going to be giving it free to you on this YouTube channel for free. So in order to support the channel, make sure you like and subscribe. And if you have any questions at the end of the video, just leave a comment. All right. So our goal as retail traders here is to identify such patterns. Remember, I told you that they create certain patterns in order for us to react in certain ways. And because we are humans and react emotionally, those patterns are going to repeat itself over and over again. So our goal as retail traders is to identify such patterns as they repeat themselves over and over again. And that is all you need. That is all you need. Identify some certain patterns that repeat themselves over and over again. That gives you a 50, 60, 70, 80% win rate with a good risk to reward, maybe like a 1 to 2 or 1 to 3 risk reward. And with proper risk management, you're good to go. There's no magic trick there. There's no abracadabra. What was the name of that stuff? Abracadabra. There's no magic stuff here. So the way I trade BTMM, which is also short for beat the market maker. Now, there are three main setups that I trade. Now, this is all in one strategy, or you can say in one concept. I don't trade SMC, I don't trade ICT concept. This is not from ICT, this is not SMC, this is none of that. It's not affiliated with any of that, right? This is something completely different. So in case you're seeing anything like the Asian range or stuff, or you're knowledgeable on ICT and you think that this is ICT or SMC, this is not it. All right. So there are three main trading setups that I'm gonna show you that you can see on my screen. And you only need at least one of them to be successful. You just need one. Just one. Pick one. If you feel like you need more trades, you can pick two to balance this out, or depending on your lifestyle, depending on where you live, depending on what resonates with you more. I'm going to be giving you three main trading setups that you should trade with, right? Some of them you can swing trade, some of them you can scalp, some of them you can day trade. Depends on your personality. You are the one that's going to choose which one you prefer, which one you resonate with. All right. The first one is multi-day formations. For me, this is my favorite. This is my best. You can call it my signature trade. I like this one. This is the best for me, followed by this one, then this one. But because this is the best for me, it might not be the best for you. This could be the best for you, or maybe this could be the best for you, whichever one you prefer. I personally, due to my lifestyle and where I live and the times and sessions that I'm able to trade, this is my go-to number one setup, right? So this is my A+ setup here. Multi-day formations, could be M formations, could be W formations, whatever you want. All right, they'll give you that M or W depending on the structure. So M formations, multi-day M formations. The second one is the London Breakouts. This is the second setup. I also like this one. This one gives you a higher risk reward than this one. This one shows up more frequently than this one. So I'm not going to be diving too deep into that, but these are the trading setups that I'm going to be showing you. You need to master at least one of them. The next thing is, before you can understand what's and how to trade these setups, right? You first of all need to understand the Asian range. You need to understand how the Asian range works, because this is what market makers use in order to begin their manipulation and begin their liquidity generation for the day. So the Asian session, you need to understand the Asian session. Asian session is usually drawn as a box, right? That's how I like to box it out, because it's a zone or an area on the chart where market makers use to accumulate liquidity, to create liquidity and accumulate orders. All right, and I'm going to be explaining how it works. So pay close attention. For those of you that have been in my channel, some of you already know this, but those of you that are new, listen up. So the Asian range, how does it work? Now, Asian session, the Asian range is basically the Asian range during the Asian session. That's basically it. And we know that the Asian session lasts for about 8 hours. It lasts from 8 hours from the time it starts. I'm going to be showing you what time it starts, but I'm not going to be diving into that, into timing right now. I just want you to understand the pattern, understand the structure, and before you can go into timing. But the Asian session lasts for 8 hours. And during that 8 hours, what usually happens is market makers use it to accumulate orders and create liquidity for the next session, which is the London session. So it's used to accumulate orders and create liquidity for the London session. Now, London session is where the manipulation starts, but this one is just used to create liquidity. Now, how exactly do they create the liquidity? How do they create liquidity? What they do is, during the Asian session, for most pairs, not all the pairs, but for most of the pairs, most of the popular pairs that people trade, is they're going to consolidate throughout the session. They're going to consolidate throughout the Asian session. Now, what does this do? What does this consolidation do? It does several things, psychologically, emotionally, and on the charts. It does several things. The first thing it does is it accumulates orders. How does it accumulate orders? We know that people trade support and resistance. And when you're trading support and resistance, this is called a range-bound support and resistance, right? Where you have the supports down here and you have the resistance up here. And we know that people that trade support and resistance, when they are trading with range bounds, they're going to be buying and selling they're going to be buying and selling at the support and resistance levels. So when price comes down here, they're going to buy. When price goes up here, they're going to sell. When price goes down here, they're going to buy. They're going to sell. And people trading on lower time frames too, maybe like 5 minutes, 1 minute, 3 minutes. They're also going to be trading some micro trends inside this zone. So there's going to be a bunch of activity going on inside this range, inside this consolidation. All right. And because of the activity going on during the Asian session, from the consolidation, bouncing off of support and resistance, what that does, the result of that is it creates liquidity. How? Liquidity is just basically where money that can be liquidated is. So is the way money is here it's in form of orders, like stop orders, buy stops, sell stops, stop losses. That is how the money is structured here. So below here, people that are buying the support, their money is going to be located down here, which is going to be in form of stop losses, right? So this is going to be stop losses are going to be down here. Stop losses. But it's not only stop losses that are going to be down there, because people trade differently. Not everyone will be buying here. Some people are buying here, and then some people trade a breakout. So what happens is stop losses are down here, right? Another thing that's going to be down here is sell stops. All right, so these are just forms of stops. So when you hear stops, stop hunts. All right, so stop losses are down here. Also, sell stops are down here. Sell stops are basically orders which, let's say you put a sell stop here. Once price touches this order, it's going to automatically put you in a sell. So people that trade breakouts, they're going to put their stop orders below this. So when price breaks out of the support, they expect it to continue down because that's a breakout. That's how people trade breakouts. So price is going to activate their stop order, their sell stop, and it's going to automatically put them in a sell. That is how it works. And if they put them in a sell, the stop is going to be up here. So there's going to be stop losses and sell stops. Also, at the top side, there's going to be stop losses and buy stops. They're going to be stop losses and buy stops at the highs here. So down here, stop losses and sell stops. At the top here, stop losses and buy stops. The stop losses are for the people that are selling the resistance. The buy stops are for people that are anticipating the breakout to the upside, so that you can automatically put them in the buy. Now, this is the liquidity that has been generated inside because of this consolidation. Now, coming into London session, this is where the manipulation occurs. So now, there are different, I don't want to dive too deep into that, but let me just give you a hint. There are different market makers for different sessions. So you have Asian session, there's a market maker that does that. There's London session, there's a market maker that does that. And then there's New York session, there's a market maker that does that. We as human beings, we are limited in such a way that we can't be up for all the sessions. There are some sessions, for example, me here in Nigeria, Asian session is when I'm asleep, right? Asian session is when I'm sleeping. It's like midnight, 12 a.m., 1 a.m. my time. So there's no way I can trade Asian session. But for some other people, for example, those of you in the US, Asian session, I think it's in the morning for them. And then either in the morning or in the afternoon, one of them. But London session is midnight, like 2 a.m., 3 a.m. for people in the US. And then New York session is in the morning. Yeah, New York session is the morning, Asian session is the afternoon, and then London session is in the night. That's for people in the US. So because of different time zones, right? Different time zones, we as a human being, we can't be up for all the sessions. For example, people in the US can't be up for London session unless you want to wake up by 2 a.m., 3 a.m. in the morning. People like me here in Nigeria or maybe other parts of Africa can't be up doing Asian session because Asian session is going to be most likely in the night. But the way market makers work is it's not just one person or one, it's complicated. It's not like All Star. We are limited in timing. They have different people managing different sessions. All right. So there's the Asian session guy, the London session guy, and the New York session guy. Although it's not one person that's managing the stuff, but you get what I mean. So Asian session, after the Asian session, the London session starts, and this is where they have to trap traders and take out some liquidity in order to move the markets. So now what happens is after price finishes consolidating in here, what's going to happen is, for example, let's say price breaks to the upside, right? Let's say there's a breakout to the upside. People trading the London breakout or trading any form of breakout are going to be anticipating buys, right? So now this one move, just this up move, this breakout does so many things. The first thing that it does is it takes out the stop losses of the people that sold this resistance here. That's one. It takes out the stop losses of the people that sold. Two, it activates the buy stops of people that put buy stops there. Three, people trading breakouts are going to be buying in here. Four, it shakes the balance of this market. For example, let's say we have 50% of people selling, and we have 50% of people buying. So you have 50% of people selling, 50% of people buying. This one move alone, this breakout alone, does so many things. Now I've mentioned the other things that it does. First, let me mention them again. First, it takes out the stop losses of people that sold. It activates the buy stops of people that are anticipating buys. It gets people to chase the breakouts coming London session open. People that trade breakout traders, that's three. Four, it shakes this balance of 50-50, right? So now it's no longer going to be 50-50 because what happened? The people that are participating in selling at this resistance have now been taken out. That's one, they've been taken out. People that are buying have increased. So the number of buyers have increased because of this buy stop has been activated and people are taking breakouts, chasing these buys. So the numbers now, for example, could now be maybe 20% of people selling and 80% of people buying. So now the masses, the majority of people are now long. Majority of people are now buying. And the way market makers work, like I told you, they take the opposite of our trades. So use your logic here. If market makers take the opposite of our trades, that means if majority of people are selling, then the market's going to go up. And if majority of people are buying, then the market's going to go down, right? So what happens here is, as the balance has been shaken from 50% to now 20% selling and 80% buying, which basically means that the masses are buying. And this automatically reads on the book of the market makers as sells. Remember, if you're buying, it's automatically reading as sells on the books of the market makers. So majority of people are long, so that means majority of the market makers orders is going to be sell. So in order for the market makers to make money, to end in profit, what do they have to do? Imagine you're the market maker and then majority of your orders have been sales. What are you going to do? You're going to most likely, you're going to take this price down so that you can make profits. So now this does a lot of things. Just this one move here does a lot of things. Now, what usually happens is after this, people are going to be buying, chasing these buys. What's going to happen is market makers are then going to hit the brakes and then they're going to reverse back down, trapping all the people that took buys inside this area. Everyone that took buys inside here are now going to be trapped. So there's going to be trapped traders here. People that are buying, going long. Oh, the market's going long. It's going up. It's going up. Call your friend. It's going up. Let's buy 100 lots. It's going up. Market makers are going to hit the brakes and then reverse the market back down. And when they reverse it back down, where is the next place that they're going to go to? They're going to go to take out the liquidity, which is down here, right? So now the people that bought here are going to get stopped out because their stop losses are going to be down here. People that bought down here are going to get stopped out because their stop losses are going to be down here. People that bought these breakouts, their stop losses are going to be down here. All of them are going to be taken out. So market makers take out the sellers and take out the buyers in just 2 moves. Break to the upside, reverse back down, cleared everybody out, right? And people that trade London breakouts, trade breakouts, they usually fall for this trap move. And I'm here to tell you that once I'm done explaining the concepts, after you've gone through my videos, you're not going to be falling for this trap anymore. So my advice to you is stop trading breakouts and actually trade this the right way. Understand how market makers move the markets. Now, this Also works for the buy side. If you invert this, if they break to the downside first, you can expect them to go up. Also understanding where you are in the trend, if it's an uptrend or a downtrend, wherever you are. I'm not going to be diving too deep into that so that the video is not too long, already 20 minutes in. So this is how the Asian range works. And this is going to help you when understanding how to trade each and every one of these setups. These three setups here is going to help you greatly to understand how this works. This one, you can already see clearly that this is actually even what this one is about. This one is a bit more complicated than that. It's an advanced setup. But understanding this is the way it works. People are going to be buying and selling inside this Asian range. There's going to be an equilibrium of orders inside here. There's going to be stop losses above and below. Buy stops, sell stops. Liquidity is going to be all over this range. And then market makers coming in London session have to manipulate the markets in such a way that they make money. Right? That is how it works. So now let me just show you some couple of examples here on what I just explained. For example, this is today. As you can see, this is a live chart, right? This is a live chart. This is a Friday. Let me just show you. This happened yesterday and happened today. Like, that's crazy. On CAD CHF. So we have our Asian range here. Remember I told you that Asian range lasts for about 8 hours, right? From here to here. This is 8 hours. You can see exactly 8 hours. Now you may be wondering, what is this vertical line? If you want to put this vertical line on your chart, right click on your mouse, go to settings on trading view. When you go to settings on trading view, you're going to go to events down here and then click on session breaks. Now this session breaks, it shows you the starting and ending of each day. So this is where this day started, this is where the day ended. So this from here to here is going to be an entire 24-hour period. So the day started here. From where the day started, counts 8 hours from that line. You're going to get the Asian range here, 8 hours, right? So this is your Asian range. All right. Remember, I told you that it's going to be liquidity above and liquidity below. So it's going to be liquidity above here in form of stop losses down here. Also buy stops and sell stops. All right. Stop loss above, stop loss below. What happens? Coming London session. London session is this green box. All right. So you can see this green box. That is the start of London session. You can see what happens. London session breaks to the upside. Now, what did I tell you happens when market makers break to the upside? It's going to get people to buy. It's going to get people to buy. Also taking out the stop losses of people that sold in here. If you even look at this perfectly, you can see that this is a very nice resistance area here. Very good for support and resistance, right? So there are going to be a bunch of people that are going to be selling in here, selling the resistance. As it broke to the upside, took out the stop losses of people that sold, also inducing people to take buys here, right? People are going to be trading breakouts. And the crazy thing about breakout is, for example, if you're looking at this on the 15-minute chart, if you're trading breakouts, let me show you where you're going to enter, because you're going to have to wait for the candle to close. So when you wait for the candle to close, guess where you're going to be buying this candle that broke out here. So this is the breakout candle. You're going to be buying here. So look how they gave you no room to profit. You're in profit for just a few minutes, and then they took it away from you immediately, right? So you can see market makers hit the brakes, reverse back down, and when they reverse back down, where they tell you that they're going to come here and take your stop losses. Might not be that day, but they're going to surely come and take your stop loss. What happens the next day? If you extend this line, the next day, London session, the same London session, they came, took out the stop losses of people that bought in here, right? You refuse to close your trade, your stop loss is going to get hit. So took out the people that sold here, took out the people that bought here in two moves. Move up, move back down. What happened here? Before they could even take out the liquidity down here, they even created more liquidity by consolidating right above, right on top of this range. So we have another consolidation here, Asian session consolidation. Liquidity is going to be above, liquidity is going to be below. So there are going to be people buying in here on this support. Also, this support here are buying in there. What happens? They take out the stop losses of people that bought, also inducing a bunch of people to take sells, hit the brakes, take this back up, right? And be sure that they're going to come back here and take out this liquidity, probably end the day like this. All right. So this is just a brief example of what I've been telling you about. This is how market makers manipulate the markets. Now, I'm going to show you a couple more examples here on the charts. Let me show you a couple more examples here on the charts. Let's go to pictures and yeah. So here's a very beautiful example of what I'm talking about. So we have Asian range consolidation here, right? 8 hours, stop loss above, stop loss below. What happens? Market makers break to the upside, getting people to buy in here, chasing the breakout. What happens? Market makers hit the breaks, reverse back down, goes back down here to take out the liquidity of people that were buying this, came back down here, took out the liquidity there, came back up, started on the consolidation in there. Here's another example. We have Asian range consolidation. Price breaks to the downside, getting people to take breakouts here, hits the breaks, reverses back up, takes out the liquidity of people that were selling in here, ends the day in consolidation. Another very beautiful example here, we have our Asian range, very tight Asian range. People are going to be taking sales in here, taking buys in here. What happens? Induce, trap a bunch of traders in here, take this back down, right? To where? To take out the liquidity of people that bought. So just basically rinse and repeat, rinse and repeat, rinse and repeat. This is a very simple setup. We have the Asian range here, break to the downside, and these people to take sales, reverse back up, take out liquidity below and take out liquidity above. Very beautiful example here. We have our Asian range, break to the upside, reverse back down, take out liquidity of people that were selling, that were buying in here and selling up there. Last example here, we have our Asian range, break to the upside, hold the breaks, let's go back down. Take out liquidity of people that were buying in here. Right? So these are just a couple of examples that I just wanted to show you guys. Now, I actually sent out some trade setups. I actually sent out some trade setups in my free Telegram. All right, so this is November 4th, which is Monday, starting of this week. I sent a couple of trades in here. I sent about 6 trades and 5 out of 6 worked out. Like 5 were winning trades and the last one was just ended in consolidation and then had to close the trade because the price wasn't really going anywhere. And that didn't even hit stop loss. That was just going sideways. So I'm going to show you that this is not just me going on the chart and just drawing some lines, doing some artwork. This is actually what I trade. This is how I trade. And I'm also teaching people how to trade this in my Telegram, sending out daily signals. Not really signals, because signals are not really going to teach you anything. Sending out price projections and analysis on what I see on each pair every day. So this was the first trade that I sent out, EuroCAD. This is one of the setups that I'm going to be explaining to you guys on the next videos. But let me just show you that this is what I trade. So looking here, what can you see? You can see this Asian session consolidation, right? Let me see if I can grab a pen so I can highlight this. All right, so we have the Asian range consolidation here, tops and bottoms. We have the breakout here. After the breakout, what happens? I took the buy there, put my stop loss below, and what happened? Price went, hit my take profit at the end of the day. Eventually went to stop on this area. Actually went all the way up here. Like, because of this was an election was the next day, so price just took this all the way up. This was me in the trade. This was me in the trade. You can see this is where I entered. This is MT5, so it actually shows you where I entered. This is where I entered, and then this was my take profits here. Price went and destroyed that take profits. Here's another trade that I took. This one was on EuroCAD. I sent this out. You can see, let me show you where I sent it out. I sent it out here. You can see EuroCAD working off of the highs of the week, possible sell-off. If you look down here, this is the same trade. This was when I entered the trade. And this is the aftermath of the trade. You can see we have the Asian range breakout here, right? Asian range breakouts. Price broke to the upside. People are going to be buying this. We are taking sales back down. So I sold here, put my stop loss above. You can see price did not come close to that stop loss at all. They waited for New York session and then this actually crashed. I'm going to even show you this on the chart because this was election made this. The US election made this move like crazy. Let me show you more examples here. I haven't sent some educational stuff here. This is more complex. You might not understand this now, but this is what I'm explaining for you guys right now. All right, this is the pattern here. But let me not dive too deep
into that. So this video is not too long. Here's another example. Here's another trade that I sent out. I said possible buys off the lows on USD CHF. Let me show you the aftermath of that particular trade. So this was the trade. This was a very beautiful trade. It's like an artwork. We have our Asian session consolidation here, very tight squeeze. Then we have price broke to the downside. What do we have? We have price giving us a double bottom here. I entered here, my stop loss below. Take profits all the way up there. This actually destroyed these highs. I'm going to show you on the chart later on. Well, this is when the trade was hitting my take profits. All right, that was when the trade was hitting my take profits. I sent another trade here on GU. Yeah, this is GBP USD. Looking at this, this is our Asian range for the week. Price broke to the upside to induce people to take buys. Came back down here. I was expecting a buy to the upside. And also understanding that election was there, so I knew that this was going to go up due to some certain confluences. And then the result of that was, where was it? Yeah. So this was the GBP USD before, and this was after. Let me show you the last one that I took. Yeah, this was CAD CHF. So looking for sales at the highs on CAD CHF here. Let me just show you the aftermath of that. I think that one's at the bottom here. Yeah, this is the aftermath. So you can see we have Asian range consolidation. This is actually the example I even showed you on the charts. Broke to the upside, sell here, put stop loss above. Actually even sold in here when I came on the chart, and this ended up hitting my take profits. Not on a popular currency, but still a currency. Euro MXN. That's EUR MX and Mexican pesos. Now, if you're not using a good broker, the spreads on this might be high, but I'm using tight spreads, so I have the ability to trade this. We have our Asian range here, price broke to the downside, getting people to take sells. I took my buys here, took this to the upside. So this is pure market manipulation here. After going down here, most people are going to be thinking, this is a downtrend, this is a downtrend. We're trading to break out to the downside, to continue the downside. Nah, bro, this is going to reverse back to the upside. The next couple of videos will be dedicated to explaining each setup. Now, I'm going to go over how to trade the first one, the second one, and the third one. I'm going to be explaining how to trade each and every one of them. I can't explain them in this video because the video is going to be too long. So I have to go through each and every one of them because they are traded differently. I've backtested the three of them extensively over the years, 3-4 years of trading this, and I've adjusted some things to make things more accurate and found out what works, what doesn't work to the point that I'm at now. So I can't explain the three of them in just one video. I have to explain each and every one. Each one has to have its own dedicated video to the topic because it's actually quite extensive to make sure that you grasp it, because everyone has different levels of understanding. Some people are beginners, some people are intermediate, some people are advanced. It will be easier for an advanced person to understand than a beginner, but I have to make it beginner friendly so you guys can understand, because I know that there are a bunch of people watching me that are beginners, basically. All right, so everything can be easy to understand. So in order not to miss out on the videos, setup 1, setup 2, and setup 3, make sure you subscribe to the channel. Subscribe. Cristiano Ronaldo. So as not to overload you with information, make sure you like and subscribe so you don't miss the next videos. You can also turn on post notifications so that you get notified when I post a new video. Like and subscribe. If you have any questions, leave them in the comments. I'll answer them. Make sure you join the free Telegram. The link is going to be in the description below. I'm going to be sending out more setups next week. So, and maybe you can grab some and maybe get some knowledge on that. If you want to see me on Instagram and follow me up on Instagram, my Instagram handle is the official DanFX. You can message me there if you have any questions or you want to contact me or talk to me. You can message me on Instagram, official DanFX. The link will also be in the description below. So if you want to contact me on Instagram, send me a message on there on Instagram. And I'll see you guys on the next one. All the links will be in the description below.